The IRS does not send agents to your door to have a conversation. That is the first thing most Americans get wrong, and it is the most expensive mistake they will ever make. When a revenue agent or a criminal investigation special agent appears at your home unannounced, the case is already open, the file already exists, your tax returns have already been reviewed, your bank records have already been pulled. The agent standing on your porch did not drive to your house to learn something new. They drove to your house because they want to hear you say something specific, and they are very good at getting people to say it. I spoke with someone who spent 21 years as a special agent inside the IRS Criminal Investigation Division. He left the agency 4 years ago. He will not go on record. But he walked me through something that every American over the age of 50 needs to understand before it is too late to matter. He described 3 phrases, not accusations, not lies, not illegal statements, but 3 completely ordinary things that people say at the door with full honesty and full good faith that automatically elevate the threat level of a case and in some situations trigger the transition from a civil audit to a criminal referral. He said he heard all 3 of them at different doors in different states from different people more times than he could count, and every single time the person saying them thought they were helping themselves. They were not. Before I get to the 3 phrases, you need to understand something about how an IRS field visit actually works, because most Americans picture it wrong. They picture a knock on the door, a badge, a few questions, and then it is over. That is not what happens. What actually happens is structured, deliberate, and designed to produce a specific outcome before the agent ever leaves your property. The IRS Criminal Investigation Division opens roughly 2,000 to 3,000 new investigations per year, according to figures the agency publishes in its own annual report. Not all of them start as criminal cases. A significant portion of them start as civil audits, routine examinations that escalate. The escalation almost never happens because an agent found a smoking gun in a spreadsheet. It happens because of what the taxpayer said during contact. My source put it plainly. He said the file tells us what happened. The conversation tells us whether you knew. That distinction between what happened and whether you knew is the entire architecture of a tax fraud case. Under 26 U.S. Code Section 7201, a criminal tax evasion charge requires the government to prove willfulness. It is not enough to show that taxes were unpaid. The government must show that you knew they were owed and chose not to pay them. That element, willfulness, is almost never in a spreadsheet. It is almost always in a conversation. And the 3 phrases I'm about to describe each hand that element directly to the agent who is standing at your door. The first phrase is some version of, "I had no idea that was taxable." It sounds like the safest thing you could possibly say. It sounds like honesty. It sounds like the kind of statement that would reduce your exposure, not increase it. My source told me it does the opposite. Here is why. Under 26 U.S. Code Section 61, the federal tax code defines gross income as all income from whatever source derived, unless a specific statutory exclusion applies. The legal baseline, the one written into federal law since 1954, is that all income is presumed taxable until proven otherwise. Cash from a side job, proceeds from a property sale, retirement account distributions, gambling winnings, forgiven debt. The presumption is taxability. The exception requires a specific rule. When you say, "I had no idea that was taxable," you are not asserting ignorance of a narrow technicality. You are asserting ignorance of the foundational presumption that every American adult is expected to know. And agents are trained to understand that this statement opens 2 doors, and only 2. Either it is true, in which case the agent now has an opening to probe how extensive that ignorance was, how long it lasted, and how much money it covered across how many tax years. Or it is not true, in which case you have just handed them a statement they can present as evidence of consciousness of guilt at a later date. Neither door leads anywhere good. He told me there is no version of "I had no idea" that improves your situation. There is only the version that opens new lines of inquiry for the agent and the version that opens slightly fewer, and neither one closes any. What you should do instead is say nothing about your state of knowledge. Nothing at all. If an agent asks whether you knew something was taxable, the only correct answer is that you would like to speak with a representative before answering questions. That is not obstruction. That is not suspicious behavior. That is a right the IRS itself is required to inform you of. Under IRS Publication 1, titled Your Rights as a Taxpayer, which every agent carries and is required to provide upon request, you have the right to representation and the right to have that representative present during any examination. Invoking that right is the most legally clean thing you can do at the door. The second phrase is, "I can explain all of this." This one is harder to avoid because it comes from a genuinely good place. You know your own finances. You know why the numbers look the way they look. You have a completely legitimate explanation for every line that triggered the contact. And so when an agent appears at your door, the natural human instinct is to demonstrate that, to show them you have nothing to hide by walking them through everything right there in the entryway or at the kitchen table. My source said this is the single most common mistake he witnessed in 21 years of fieldwork. Not because the explanations are wrong, they are often completely accurate, but because the moment you begin explaining, you are doing something with serious legal consequences that most people do not fully understand. You are making statements to a federal officer during an official investigation. Under 18 U.S. Code, Section 1001, it is a federal felony to make any materially false statement to a federal officer in the course of any matter within the jurisdiction of the federal government, even if the investigation is civil, even if you are not under oath, even if you are standing in your own living room in your bathrobe. The statute does not require that you intended to deceive at the outset. It requires only that the statement was false and that you made it knowingly. And here is the problem. Memory is imperfect. Records are incomplete. Details you are absolutely certain of in the moment sometimes turn out, when documents surface weeks or months later, to be slightly different from what you said. Not fraudulently different, just different in the way that human memory differs from paper. But in a federal investigation, slightly different is all it takes. He described a pattern he saw repeat itself across his career. A taxpayer who spent an hour at their kitchen table giving a thorough, honest, good faith account of a series of transactions, only to have one detail in that account contradict a document that appeared in discovery 3 months later. The original conversation, recorded in the agent's notes from day one, becomes the foundation of a 1001 charge that has nothing to do with the original tax issue. That is how a civil audit becomes a criminal referral, not because the taxpayer lied, because the taxpayer talked. The answer to, "Can you explain this?" is always the same. You say, "I want to cooperate fully, and I will do that through my representative." Then you stop talking. The third phrase is the one that surprised me most when he described it. It is, "I think I might have made a mistake." This one is the most intuitive thing in the world to say. You are not a criminal. You are not trying to evade anything. You filed your returns as carefully as you knew how, and somewhere in there, something may have gone wrong. Saying so feels like the reasonable, responsible, adult thing to do. It feels like it should reduce tension and demonstrate good faith. My source told me that in the architecture of a criminal tax case, that phrase is close to the most damaging thing a taxpayer can voluntarily offer. Here is why. There is a legal difference between a civil tax deficiency and a criminal tax violation, and that difference lives almost entirely in what can be proven about intent. A civil deficiency, an underpayment, an error, a missed item, is subject to penalties and interest, and those are serious, but they are resolved through the civil process. A criminal violation requires willfulness, which, as we discussed, is knowledge and intent. The moment you say, "I think I might have made a mistake," you have done something that seems minor but is legally significant. You have placed yourself in the tax period in question. You have acknowledged awareness of the return's contents. And you have introduced the word mistake, which an experienced investigator can use as the foundation of a line of questions designed to establish the boundary between mistake and intent. A boundary that is much harder to defend once you have volunteered that you were paying attention. He told me the phrase is particularly dangerous because it invites the follow-up. The follow-up is always some version of, "What do you think the mistake was?" And now you are deep in a conversation you never needed to be in, describing specifics you were not required to describe, with a federal agent whose notes from this visit will be in a file for years. The pattern across all three phrases is the same. They all come from honesty. They all come from the instinct to cooperate and diffuse, and they all hand the agent the one thing they came to your door to get: evidence of your state of mind. My source said something near the end of our conversation that I've been thinking about since. He said the taxpayers who came through the process best were almost never the ones who cooperated most at the door. They were the ones who said the least, called a representative before the agent left the porch, and let the professional handle every communication that came after. He said in 21 years, he never once held it against someone for invoking their right to representation. He said that is the system working exactly the way it is supposed to work. He said what he did hold in his notes, what stayed in the file, was every other word. Now let me talk to you directly for a moment, because I think some of you watching this are in a situation that feels more urgent than a hypothetical. Maybe you have already had contact. Maybe there is already a letter somewhere on your kitchen counter. Maybe someone has already knocked. If that is you, here is what matters right now. The IRS is required by law to inform you of your rights at the start of any examination. That is in Publication 1, and every agent knows it. Your right to representation means you can stop any conversation at any point, before it starts, in the middle, or after one question, and say, "I would like to have a representative present before I continue." That right does not expire. It does not weaken because you already answered 2 questions. It is available to you at any moment. The question I want to leave you with is this. If an agent knocked on your door today, do you know exactly what you would say in the first 30 seconds? Not what you would eventually figure out. What you would say immediately, before the instinct to explain kicks in. Most people do not have an answer to that question. And the ones who do not are the ones my source spent 21 years visiting. If this reached you before you needed it, that is the best possible outcome. Share it with someone in your life who handles their own finances, a parent, a sibling, a neighbor who runs a small business. The three phrases in this video do not sound dangerous. That is the entire reason they are dangerous. One share from you could be the difference between someone knowing their rights and someone spending the next 2 years finding out what happens when they did not. Drop a comment and tell me, have you ever had any contact with the IRS? A letter, a call, a visit? How did you handle it? I read every single one, and the most common situations become future videos. The next video on this channel covers something that a former FinCEN compliance officer described to me as the quiet expansion that most Americans will not notice until it is already too late. A change to the reporting framework that affects anyone who has moved more than a certain amount of money in the last 36 months. If you have a parent, a spouse, or a sibling who handles significant cash transactions or keeps large balances in a single account, that video is the one to watch before the end of this year. The agent at your door already knows what is in your file. The only question is what you are about to add to it.